Okay, Jeffersonians, welcome to a quick walk through the Jefferson State Financial Model. My name's Steve Baird, and we're recording in Shasta County today. What we're looking at is the financial model for Jefferson, which is located at www.soj51.net. What you can do is download the Jefferson model, and this is what you'll bring up. You'll see 24 counties that come up on the main screen. What you'll see on the bottom is a tab called Master. It's pretty much the first 7 tabs along the bottom that are of interest. And then you'll see each county has an individual tab across the bottom. So back on our master screen, we have 24 counties shown, and there are a number of fields that you can enter. These items up here, which I'm rolling through with the mouse, these are our tax rates, and below that are the county allocations. 100% all the way down to 33% in some cases. And then the trick piece of this model is you can go ahead and say which counties are in your state and which counties won't be. So we have a couple of counties here, Sonoma, Napa, Alpine, and Amador, we have turned off. Because right now we're primarily looking at these 20 counties. So as you see in a light gray down here, 20 is the total that we're using for this model. A number of people have said, okay, where does the money come from? How is it spent? And oh, by the way, what about education? Well, we have each of those columns, and we're actually going to show you today where they come from. We have our revenue sources, we have the exact location of where the expenditures come from, and then we have the K-12 expenditures for 2014 that were just produced by the state on February 11th. So let's go to the first screen. Again, we're running Shasta County, so these are the details that we'll be looking at. We have what we call on the second tab of the model is the abstract. It has the breakdown of where the information is located and how all these things total up to both revenue, expenditures, K-12 expenses, and whether that county has a surplus or a deficit. So for Shasta, we're looking at this particular website here. That's where we're actually going to pull the budget from, and this is where we get all of the K-12 education. So let's move through. Revenues. Our first element is property taxes, and in our base model, all property taxes, whether secured or unsecured, go to the county itself. So you can see that how much is paid and how much is paid through unsecured. Where is this located? And this is what we'll be doing throughout the entire presentation, is actually showing where the data was pulled from. So you see that this is actually on the Secretary of State's website, and we go to the Shasta County PDF for taxes for 13 and 14. We have 2 red-lined items, both for the secured tax, your basic property tax, and the unsecured portion, which is down below. We'll see that even though you have a number of tax bills issued, taxes that are charged, but only a certain percentage of taxes are paid. That's what we use, the actual paid portion of both secured and unsecured taxes. Our next line item is what we call state personal income taxes. These are the taxes that you pay directly to the state. And for Shasta County, and we go to the governing site to show you where the Shasta County income number comes from, and we see it here that it's $37,593 per individual in the county. And then we show you where we get also from the governing site the population, which is 178,586. Those two multiplied together, and then taking 85% of that number, that's what goes into the coffers of the county of Shasta. The residual 15% actually goes into the Jefferson state budget. Federal income tax return is the largest portion of monies that will come back to Jefferson. For Shasta County, we see that we have over $590 million coming back from the federal government. We use the California-based model of 88 cents on the dollar. So for every dollar in taxes that goes to the federal government, 88 cents of that comes back to the state of California. Since we're using a base model based on California, that's where this number is derived from. So we show our population again of 178,568 and an average per capita taxes spent of $4,420. Again, we're using the Brookings Institute information, and the latest numbers they have are posted for 2007. And since we took an economic downturn in 2007, we pretty much recovered by now. I would assume that the numbers would be very close to each other. So this is where we derive that from. We go back to the governing site, and that again pulls our population. So those two numbers multiplied together, again, 85% of that goes back to the county of Shasta where the money was derived from, and 15% of that goes to finance part of the state of Jefferson's budget. For sales taxes, Shasta had over $2 billion worth of sales, and at the tax rate of, we're using an average of 8%. This is pulled from the US Census data. Again, we're using a 2007 number, which should be similar to the beginning of 2015. We see $2.56 billion being spent. 8% of that would be the tax revenue garnered, and then 33% of that goes to the county of Shasta, and the residual 67% goes to the state of Jefferson. This is where the Jefferson would actually get a majority of its funding. For the last piece, we have gasoline taxes. We have 91 million gallons of fuel flowage for the county of Shasta, and at the current California rate of 53 cents per gallon, we get this number, and this is pulled from the CA.gov's Energy Almanac. And we see for the last year available, 2012, we show 91 million gallons of fuel flowage. So the state and the county will do a 50-50 split on this. So 50% will go to Shasta, 50% will go to Jefferson. So what we've talked about is what looks like a complicated mathematical formula for how each of these tax base pieces is summed for Jefferson and for Shasta County. So this is what Shasta County is going to be making. Their average property tax times the number of parcels, they get 100% of that. And same for the unsecured tax, for the assessments, they have 100% of that as well. The population per the capita income times 8% tax rate, and 85% of that comes to Shasta. And then again, we use population and per capita federal taxes paid, 88 cents on the dollar coming back, and then 85% of that number. County gross sales times the 8% sales tax rate times a 33% contribution to the county of Shasta. And the last piece would be our gallons of fuel sold times 53 cents per gallon times a 50-50 split. That's how the numbers are generated for the county of Shasta. So we see these are the income streams from each of those formulas using the numbers that we spoke about earlier. So we see that general revenues for Shasta County are slightly over $1.3 billion. From that, we take a number of expenses. The first one is how much does it cost to run the county of Shasta? Well, that's determined by the Board of Supervisors, as it should be. So we'll go to the Shasta County website, which we show up here, and each site will be different for each individual county. And we see that this is the 14-15 adopted fiscal year budget. And then we look for the all funds total line, and we see that they have an average spend of $689 million plus. So that's our first number. Now, if you look at their website, you'll be able to go through literally hundreds of pages of directly how they make each expenditure, but this is the total roll-up number, which makes it easy on us for our calculation. From there, the other piece that takes a large expenditure is K-12 expenses. There was a while back when our model didn't include this and the crowd spoke and we answered. So we went to the very large database that the state has, and it's located at what we show here at the top. It's an FTP site because the site is so large, and it produces data that has over 717,000 individual records. For the folks in Jefferson, that only accounts for roughly 113,000 records. So you'll see that it has a bunch of numbers and some cost figures, and then at the edge it shows what that's paid for. What we've been able to do is to take those hundreds of thousands of records and do what we call a pivot table. And a pivot table takes, sorts that order, combines them for the type of line items that they are, and then from this we can create our own balance sheet with a simple click. So you'll see the revenues, but what we're looking for here is our expenditure numbers, K through 12, for Shasta County. And then in our model, you can see through, you can click on each individual county, and it will roll over and change the cost structure for each K through 12 for each individual county. So now we have all of our pieces. We have our $1.3 billion in revenue. We have our $469 million in budgeted expenditures by the county, plus $334 million spent on K through 12, and the county of Shasta winds up with a surplus of $498 million plus. So that is money that will be used to spend on items like roadways, if Shasta County has any cities within it, a number of things that the state used to provide, now the county will provide it. As the state of Jefferson will not have a very large government at all. The California government currently has 570 different agencies. We foresee 35 to 50 agencies, and they won't be staffed in order to do the work. What they'll be staffed for is advisory to the counties, because the counties will be performing all this work. A number of questions also arise about what happens with all of the buildings within Jefferson. All the land, all the vehicles belong to the people of Jefferson because we prepaid them. But you'll notice on our master sheet there is a cost for that. We go back to the top, and we see that the state revenue generated is $3.5 million. That's 15% of state personal income tax, 15% of federal income taxes returned to the state, 67% of state sales tax, and 50% of the fuel taxes. Totals up to $3.5 billion. But we do owe the state of California, based on our population, which we'll have, if we have these 20 counties, 4.59% of $340 billion of current recognized debt. That means that the state of Jefferson will owe the state of California $15.6 billion, which we'll be able to pay over 30 years at $520 million a year. That's why the state of Jefferson net after debt payment has just about $3 billion with these 20 counties involved. So now that we've seen how each of the counties' budgets are structured, where to find them, and where the K through 12 expenditures come from, I just want to make note of one last piece. We do have some counties when Jefferson is born that are in the red. There's a number down here that's it's almost $74 million. That also comes out of this state budget number. The state will ensure that when we start Jefferson, that each of these red counties will be accounted for, and they'll have a break even when they begin. So nobody's going to start out in a deficit position. What we'll also notice is that the total surplus for Jefferson is almost $7.77 billion. This again is not money to go spend wildly on. These are the functions that the state used to produce that the counties will take over. So there are a number of items such as roadways, so much as infrastructure. These all belong to the counties now, and as such will be spent from these residual monies here. So the money that we're going to get in Jefferson is going to be the residuals of the federal tax and the other taxes that we talked about earlier. So that's it for the finances in Jefferson. Again, I want you to recognize their site, www.soj51.net, where you can pull this up. You can actually create your own state by changing who's in, who's out. You can also increase or lower the tax rate that we get. And then also, you can also modify the split between the county and the states. If you have additional questions, please go to www.soj51.net or our sister site, jeffersondeclaration.net.